The interesting thing, in my opinion, is that yesterday it was revealed that Vanguard is our largest shareholder, holding 20 million shares of MSTR. Vanguard, of course, serves as an example of many things. First of all, despite their opinions, Vanguard's CEO and management team do not support cryptocurrency or Bitcoin in any way. Because, whether they like it or not, the funds they manage are investing passively in this. In spite of the fact that their CEO and numerous other senior officials have previously stated that they are adamantly opposed to cryptocurrencies, Vanguard, the second largest asset manager in the world, is becoming heavily involved in the cryptocurrency field. They are essentially compelled to participate in the cryptocurrency due to the state of the market. And yes, this does imply that trillions of dollars might be invested in Bitcoin, XRP, and other altcoins. Additionally, I believe that this will be a huge liquidity tsunami that will significantly raise industry prices. Additionally, I would want to remind everyone of something. All of the leading asset managers in the late 1990s opposed internet firms, but they were also covertly buying important internet company stocks, and some of them who made the right decisions ended up making a lot of money because they were ultimately profitable. With regard to cryptocurrencies like XRP, HBAR, and a few others that are offering incredible services to the public, and of course the private sector, that the public sector has not yet fully appreciated, I do believe that we are in a very similar scenario now. Having said that, I must admit that I think this is a very significant moment. To ensure that everyone sees today's video, make sure you hit the like button. In this context, let's hear Michael Saylor's thoughts. Take a look at the past. Bitcoin's annual growth rate has been slowing down from 120% to 80%. When I got into it, it was clocking between 80 and 90%. For the last 5 years, it has been between 55 and 60%. If the rate is examined over a 20-year period, I predict that it will slow from 55% R to 20% R to 20% R. What's causing it to slow down? It goes without saying that, according to the law of big numbers, an asset worth $100 trillion will not grow 80% at that rate. It is slowing down as a result of its merger with the capital markets, which results in a decrease in the amount of money in circulation. It's more difficult. I mean, who knows that $1 million business can outgrow a $1 billion business, which in turn can outgrow a $10 billion business, which in turn can outgrow a $100 billion business, which can outgrow a $1 trillion business, which can outgrow a $10 trillion business, which can outgrow a $10 trillion business, which can outgrow a $100 trillion business. Not difficult. It's just math and the law of big numbers. The 20% aim is, in my opinion, essentially equities capital that is controlled through buybacks to remain pretty scarce. If you want a bucket of the highest quality scarce capital in the world prior to Bitcoin being the S&P index, and you are aware of that standard. For a century, it has been around 10% annually. What will you gain from the S&P then? 10 to 12%? The real amount will depend on both the increase of the money supply and the growth in equity. Bitcoin will do better than the S&P index, in my opinion. And I believe the reason it will beat the S&P index is rather straightforward. The counterparty risk associated with corporate structures is absent. Furthermore, it is not exposed to currency fluctuations. The S&P is therefore burdened with dozens and dozens of company risk indicators, such as supply chain, tariffs, etc. I have warehouses, nexus, and enterprise in Ukraine, and natural gas infrastructure in Iran, so there are legal, political, and physical risks involved. Numerous real-world factors can be considered dangers in the S&P. All businesses receive cash flows, including pesos, naira, euros, CNY, rubles, dollars, Canadian currency, AUD, and so on. If the physical, political, and management risks are eliminated, Bitcoin is the result of removing all of those risk elements while retaining the pure capital. Bitcoin will therefore be more than those things, whatever they may be. How much more? For example, how much does something cost? 6-8% annually. Therefore, you should go for Bitcoin around 18 to 20 if you're eyeing the S&P at 12. Why is it going to be 18-20? I eliminated the risk variables. I also removed the limitations. For instance, on Sunday morning in Iran, it is not possible to go long 50x on Apple stock, correct? You can't. You can't. You just cannot, but we can discuss why. Therefore, on Sunday morning, you cannot short or go long an equity 20x. Thus, you have all of these equity guardrails that restrict leverage and utility. There are no holidays for Bitcoin, right? If I possess pure wealth, I could have endless leverage and unlimited utility anywhere in the globe, every day of the year. What happens to a security that you should either go long or short on a bank holiday? No, you can't. All right, so the S&P, that benchmark and bucket, is less liquid, less volatile, and less useful. In addition to being more diverse and dangerous, it also involves human elements. The S&P board simply chooses what should be included. Whether they leave out something that shouldn't be there, or they don't include the correct stuff. Therefore, if you're searching for a purely objective monetary index that is subject to natural laws, Bitcoin is the most practical kind of capital asset available to everyone, anywhere, at any time. It wouldn't be unfair for me to suggest that it should perform twice as well as the next greatest item. I predict that it will likely be 50% better. Using Michael Saylor's own reasoning, I wish to make a point here. MicroStrategy would be worth more than twice as much as it is now. If Michael Saylor had used all of the money he was raising to buy XRP rather than Bitcoin. That being said, Michael Saylor did discuss power laws and how it becomes more difficult for a number to rise exponentially from there when it is larger, in contrast to the capital markets. Correct? Put another way, it goes without saying that a $100 trillion corporation will not expand as much as a $1 trillion one. Bitcoin is the most popular cryptocurrency right now, and XRP is only worth about a tenth of what Bitcoin is worth. Footnote? Therefore, if Michael Saylor had been buying XRP instead of Bitcoin, his company, which is worth billions of dollars, would have been worth hundreds of billions of dollars, if not more, according to his own power laws. In addition, XRP has a lot more potential for price appreciation. And that doesn't even account for the fact that XRP is a fundamentally superior technology to Bitcoin in every manner. If we truly want to determine which cryptocurrencies are most likely to be the best, we must examine the original motivation behind their creation. Cryptocurrencies were created to offer a decentralized substitute for the centralized monetary systems that are now in use worldwide. Do not misunderstand. Bitcoin was a great initial illustration of what a cryptocurrency could be. However, Layer 2 is essentially non-existent when it comes to true programmability, creating decentralized systems on top of Bitcoin. Bitcoin's slowness and the functionality of the basic layer blockchain make it impossible to effectively construct anything on top of it. However, there is no issue with XRP, Solana, or Ethereum because of that. These cryptocurrencies are superior because they work as intended. These days, Bitcoin is essentially comparable to, Yahoo, and XRP is comparable to Google Chrome. That's my perspective on it. Nobody uses Yahoo, and those who do are most likely over 50. If you guys utilize this video, I don't mean to offend anyone. Simply put, it is essentially poorer than browsers like Chrome, and XRP is just that. It's simply superior in every way. Having said that, Michael Saylor raises a few additional crucial considerations that are unquestionably more relevant to XRP than to Bitcoin. Before we conclude with a very significant message, let's hear what he has to say. John Bogle and the Vanguard 500 were founded on the idea that human decision-making is insufficient in comparison to the market, which is typically smarter than any individual's view. Vanguard has many sizable passive funds, and passive investing often performs better than active investing. Once you grasp that, you'll see that the fundamental idea behind a Bitcoin treasury firm is to attract equity investors who would otherwise be unable to purchase a commodity, thereby promoting the use of Bitcoin. In our most recent presentation, for example, we displayed $35 trillion in discretionary capital for equities investors and $700